We're going to continue to turn on the printer and make sure it goes like brrrr. What's up, Bullish gang? Y'all already know what we're doing from the title of the video, but I just want to speak about it briefly. Basically, Jerome Powell had a Fed meeting this week on Wednesday, and he was talking about inflation and basically in the future, if a Chipotle burrito is going to be $15 instead of it being $10, which in effect would make the rents go higher and a lot of other things that would affect us in the future. So basically, I'm just going to translate what Jerome Powell was really trying to say, but in my way, as y'all already know. And if you don't, then you're about to find out. So with that being said, be sure to give this video a thumbs up for more content like this, and so more people can really understand what Jerome Powell was actually trying to say in a dumbed down version. Be sure to subscribe to Bullish for more content like this, and hey, share this video with a friend or family member if you laughed at it or if you learned something. So with that being said, let's get into it.
Realm of healthcare providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice.
Yo, shout out to all the healthcare workers and essential workers. They've been holding shit down since March of 2020 when Corona hit the world.
The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments.
Basically, we helped everybody through this shit. Alright? It just wasn't us. We helped everybody. We gave them like 2 stimmies and then they got another stimmy. Nah, hold up. I think they got 3 stimmies. Wait, 1,200, 600, 14. Nah, that's 3 stimmies. Okay, never mind.
Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible.
Basically, we gave all y'all a bunch of money. Well, we think it's a bunch of money, but it's not. But it still should have been enough for you to sustain life and pay your bills.
And to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread. But with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action.
Basically, what I'm trying to say is shit could have got worse around here, but we swooped in and saved the day. Barely.
From Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions.
Basically, when we helped y'all out, we came through for y'all. Alright? Not all y'all, but hopefully most of y'all. Well, not even most of y'all, but some of y'all. Shit, give us props.
And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes.
We're going to continue to turn on the printer and make sure it goes like brrrr.
Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy
which means stocks only go up and shorting the market is terrorism.
Until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year.
Which basically means when the pandemic is gone, stocks are really only going to go up and we're going to be booming. But if it come back, shit may hit the fan. But guess what? We turn it on the printer. Brr, brr, brr.
In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible.
Man, if y'all wear your mask, shit. How many times have we said it? All throughout March 2020 and now. It's been a year. Wear your mask if you going in public with people. Shit. Lives matter.
The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak.
Basically, y'all are not spreading apart when around people, and shit continues to hit the fan, so we gotta come on and turn on the printer so we good again and the stock market just doesn't crash down to hell.
Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up.
So basically, you can go buy yourself some real estate. We in a buyer's market. People buying all sorts of property. We back like we never left. And if you want to travel, you can. All right? If I want to go to Mexico, I can go to Mexico.
The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities.
Because we turn on the printers, we strike.
The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections.
So shit got popping, basically, since December, and shit is going to continue to pop and only go up.
In commenting on the stronger outlook, participants noted progress on vaccinations as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February.
Woo! We back, baby! We back up, employed! People getting jobs out in this shit! They still getting jobs because of us! That's what's happening.
The hospitality sector recouped about 2/3 of the jobs that were lost in December and January. Nonetheless, employment in this sector is more than 3 million below its level at the onset of the pandemic.
All right, we still got some work to do in that sector, but it's all right.
For the economy as a whole, employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February.
So we going back up in the employment range. We're still not at normal levels, but shit is going to work out. We're getting there.
It understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline.
The employment rate is going to continue to go down. All right? I'm here to say it.
The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023.
Which is great. It means people are getting employed in this shit. It's going to continue to go up just like the stock market. Because that's it. It only goes up. It never goes down.
The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future.
Yo, shout out to all the brothers and sisters out there that may be struggling, but we gonna help y'all come back up. That's what I'm trying to say. We in this shit together. Well, not really. You know, I got more money. That's basically what I'm trying to say, but we gonna try to help y'all through this shit. Barely.
Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023.
So basically, Your Chipotle burrito is not going to cost $15 in the future. It will still cost $10. Your rent hopefully won't skyrocket. It might go up by like $5, $10, $15, $20, but it ain't going to be crazy in this shit. Inflation is straight. We got this shit under control because stocks only go up, and we can't say inflation is going up because then everything will go down. That ain't happening. Not yet.
The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal.
When people get jobs, shit happens. Our economy goes up. That's basically what our policy says. Everyone needs to get a job, and then stocks will only go up, and then we straight.
Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%.
We're trying to make sure this shit stay around the range of 2%, because when it's 2%, we straight. But if it goes above that, shit's gonna hit the fan, hell may break loose, but we gonna stay away from that.
We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time.
So basically, we're gonna make some more moves when shit gets back to normal, and inflation is gonna stay at 2% and around that range for a long time. That's what I'm trying to say. Shit.
I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month.
So basically, we turning on the printers. We ain't gonna stop turning them on. Print the motherfucking money.
Until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved.
Shit is gonna take time to get back to normal. This shit ain't easy. We almost started from the bottom, but now we here. All right?
Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals.
Basically, we on the way to hitting the goals. And we ain't gonna stop until we do.
Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible.
In conclusion, we gonna help y'all with this shit by turning on the printers. We ain't gonna turn them off. That money's gonna go brrrr. All right, we gonna hand that out, some more stimmies. Stocks are only gonna go up. We're gonna keep inflation down, and we gonna make sure shit's straight. All right, we ain't going back to the pandemic levels. It only goes up from here, baby.
Thank you. I look forward to your questions.
Thank you. I look forward to your questions, but I won't be answering them as a translator because I'm done. All right. Actually, I don't want any questions. I'm out.